Hey guys, it's Matt here, and in this short video I want to cover an easy Forex strategy that you can use with the FxPM software while you're on your trial. We have 6 tested strategies that we use with this platform. While you're on your trial and you're just trying to get familiar with the software, I wanted to focus on some of the easier strategies so you could just get a feel for how to use it, and then if you decide to join our team, obviously, you'll learn a lot more of what to do with the software and some additional strategies. For the most part, if you're like many traders and you need more rules, you need more structure to how you take entries and how you manage the trade and exit the trade, then what we'll focus on is passive trading strategies. And what that means is trades that happen in these green zones or these red zones. And you can see that they're a little bit differently spaced across the different currencies, because what the software is doing is measuring the price action on each of these currency pairs and statistically telling you when a currency pair moves too far, too fast, when it should revert back to its mean. And so different currencies that have different volatility levels, they all do this differently, and that's what this software is very good at measuring and helping you predict when a currency is going to bounce or turn. So the easiest strategy to focus on is looking for 2 or more of these Fibonacci levels in the red or green zones. And when this blue price line hits these levels, that's where you'll execute your trade. If you're a more aggressive and more active trader, you do a lot of scalping, you can look for like these levels here. You've got this one around big figure where there's like 4 levels right here within a couple pips of each other. That would be a very aggressive, active trade to take because you're in this middle zone. But if you see the price move down into the green zone and you see it hitting this level here, 64, 63, there's also a 65. If you could get a 64 fill, take the trade. And same thing, if you see levels like this in the red zones where you've got 2 or more of these Fibonacci levels, you can go ahead and execute those trades. If you see something like this, that's an awesome trade setup. We look for these where you've got 5 levels called a black PMD, and you're basically at a second zone here. So stuff like that. So again, if the market needs to be somewhat volatile, very active. That's why we typically trade the early New York session. It's where you have most of your volatility and you'll see most of these trade setups. If you're trading at a time outside of that, then you might have to execute trades that are just inside the green and red zones. And you'll see those work a lot too, where you'll come down, the volatility is just not there, but you'll hit like this 32 level and it'll bounce from there. So if you're trading in the Asia market or you're trading kind of after hours, you can look to trade a little bit more actively and trade in this white zone. But if you're just getting started and you're trading during a very active time in the market, you can just look for these passive trades. Ignore the arrows for now, the direction, all that stuff. Let's just focus on something easy to start out with, and I'll follow up with some videos on how you can look at trend direction and stuff like that a little bit further on. But for now, I just want to focus on this easy Forex strategy with the FxPM software, just the red and green zones on multiple dynamic Fibonacci levels. Just keep it simple, trade with good risk to reward. I typically 8-point stop, 25-point limit. I will adjust those for certain types of trades, but for now, keep it simple.